Welcome to our channel, where we'll learn all about money. In this video, we're going to share with you some of the money-making tips from millionaires that you can use to start your journey towards financial freedom. We're also going to explain some of the main concepts behind these tips and how they are used by some of the current millionaires in the world. So, let's get started. The first concept is income. Income is the amount of money that you earn or receive from various sources, such as your job, your business, your investments, or your gifts. Income is important because it determines how much money you have available to spend, save, or invest. The first tip is to increase your income. This means that you should look for ways to earn more money from your current sources or create new sources of income. This will help you have more money to achieve your financial goals. One of the current millionaires who follows this tip is Grant Cardone, the author of the 10x Rule. He says that the key to increasing your income is to increase your value in the marketplace by improving your skills, knowledge, and network. He also says that you should have multiple streams of income that are scalable and passive, meaning that they can grow without your direct involvement. He suggests that you should aim for at least 5 streams of income, such as earned income. This is the money that you earn from your job or profession by trading your time and skills for money. Profit income. This is the money that you earn from selling something for more than it costs you to make or buy it. Interest income. This is the money that you earn from lending your money to someone else who pays you interest for using it. Dividend income. This is the money that you earn from owning a share of a company that pays you a portion of its profits. Rental income. This is the money that you earn from renting out something that you own, such as a property or a vehicle. The second concept is expenses. Expenses are the amount of money that you spend on various things, such as your bills, your taxes, your debts, your living costs, or your entertainment. Expenses are important because they determine how much money you have left over after paying for your needs and wants. The second tip is to reduce your expenses. This means that you should look for ways to spend less money on things that are not essential or valuable to you. This will help you save more money and avoid debt. One of the current millionaires who follows this tip is Dave Ramsey, the author of the Total Money Makeover. He says that the key to reducing your expenses is to budget your income and expenses and stick to it. He also says that you should pay off your debts as soon as possible and avoid using credit cards or loans to buy things that you can't afford. He suggests that you should follow these steps to get out of debt and stay out of debt. List all your debts from smallest to largest and pay them off in that order, while making minimum payments on the rest. This is called the debt snowball method. Save up an emergency fund of $1,000 to cover any unexpected expenses that may arise. Save up 3 to 6 months of living expenses in a separate account to protect yourself from any loss of income or major emergencies. This is called the fully funded emergency fund. Invest 15% of your income in a retirement account, such as a 401k or an IRA, to secure your future. Save up for your children's college education in a tax-advantaged account, such as a 529 plan or an ESA, to help them avoid student loans. Pay off your mortgage early and own your home free and clear. Build wealth and give generously to causes that you care about. The third concept is savings. Savings are the amount of money that you set aside for future use, such as for emergencies, opportunities, or goals. Savings are important because they provide you with security, flexibility, and peace of mind. The third tip is to save more money. This means that you should look for ways to increase the amount of money that you save every month. This will help you build your wealth and achieve your financial goals. One of the current millionaires who follows this tip is Robert Kiyosaki, the author of Rich Dad, Poor Dad. He says that the key to saving more money is to pay yourself first. He also says that you should save money in different types of accounts for different purposes. He suggests that you should have at least 3 types of savings accounts. A checking account. This is where you keep your money for your daily expenses and bills. You should have enough money in this account to cover 1 month of your expenses. A savings account. This is where you keep your money for your short-term goals and opportunities, such as for a vacation, a car, or a business idea. You should have enough money in this account to cover 6 months of your expenses. An investment account. This is where you keep your money for your long-term goals and retirement, such as for a house, a college fund, or a legacy. You should have enough money in this account to generate passive income that exceeds your expenses. The fourth concept is investing. Investing is the process of using your money to buy something that will generate more money in the future, such as stocks, bonds, real estate, or businesses. Investing is important because it helps you grow your money and create passive income streams. The fourth tip is to invest more money. This means that you should look for ways to increase the amount of money that you invest every month. This will help you grow your wealth and create passive income streams. One of the current millionaires who follows this tip is Warren Buffett, the CEO of Berkshire Hathaway and one of the richest people in the world. He says that the key to investing more money is to learn how to value businesses and buy them at a discount. He also says that you should invest in what you know and understand and hold them for a long time. He suggests that you should follow these principles when investing. Invest in businesses that have a durable competitive advantage, meaning that they can maintain their profitability and market share over time. Invest in businesses that have a strong management team, meaning that they can run the business efficiently and effectively. Invest in businesses that have a low debt-to-equity ratio, meaning that they have more equity than debt on their balance sheet. Invest in businesses that have a high return on equity, meaning that they can generate more profits from their equity. Invest in businesses that have a low price-to-earnings ratio, meaning that they are undervalued by the market. The fifth concept is net worth. Net worth is the difference between your assets and liabilities. Assets are things that you own that have value. Assets are things that you own that have value, such as your money, your investments, your property, or your business. Liabilities are things that you owe that have value, such as your debts, your loans, your mortgages, or your taxes. Net worth is important because it measures your financial health and wealth. The fifth tip is to increase your net worth. This means that you should look for ways to increase your assets and decrease your liabilities. This will help you improve your financial health and wealth. One of the current millionaires who follows this tip is Mark Cuban, the owner of the Dallas Mavericks and a star of Shark Tank. He says that the key to increasing your net worth is to live like a student until you have enough money to live like a king. He also says that you should avoid debt as much as possible and pay it off as soon as possible. He suggests that you should follow these steps to increase your net worth. Track your net worth by listing all your assets and liabilities and calculating the difference. Set a realistic and specific goal for your net worth and break it down into smaller milestones. Create a budget for your income and expenses and stick to it. Save and invest at least 10% of your income every month. Pay off your high-interest debts first and then work on your low-interest debts. Increase your income by asking for a raise, starting a side hustle, or creating a product or service. Decrease your expenses by cutting out unnecessary spending, negotiating better deals, or finding cheaper alternatives. Review your progress regularly and celebrate your achievements. These are just some of the money-making tips from millionaires that you can use to master money and achieve financial freedom. Of course, there are many more tips and tricks that we could cover, but we're running out of time. So, I hope you enjoyed this video and learned something new. If you did, please smash that like button, subscribe to our channel, and hit the bell icon to get notified of our next video. And don't forget to share this video with your friends and family who want to learn more about money. Thanks for watching, and I'll see you next time. Until then, stay mad about money.